Hey guys, Omar here, broker and CEO of Alden Mortgage and Ome Realty. So this is going to be your mortgage rate update. We are currently at 4/27/2022. So we're going to be pricing out 5 different mortgaging products. It's going to be a 30-year fixed, a 15-year fixed, a 30-year FHA, a 30-year jumbo, and a 5/1 adjustable rate mortgage. And if you don't know what a 5/1 adjustable rate mortgage is by now, it is a interest only fixed for 5 years, then adjust every year after that according to the cap in the market on your product. Now, currently sitting at a 30-year fix, we're sitting at 5.30%. That is 0.02% increase from 1 day ago, 0.03% increase from 1 week ago, 0.35% increase from 1 month ago, and 2.16% increase from 1 year ago. 15-year fix will be sitting at 4.72%. That is 0.01% increase from 1 day ago, 0.10% increase from 1 week ago, 0.5% increase from 1 month ago, and 2.15% increase from 1 year ago. 30-year FHA will be sitting at 4.88%. That is no change from yesterday, 0.08% increase from 1 week ago, 0.43% increase from 1 month ago, and 2.25% increase from 1 year ago. 30-year jumbo will be sitting at 4.51%. That is 0.01% increase from 1 day ago, 0.11% increase from 1 week ago, 0.31% increase from 1 month ago, and 1.31% increase from 1 year ago. 5/1 adjustable rate mortgage will be sitting at 4.20. That is no change from yesterday, 0.06% increase from 1 week ago, 0.25% increase from 1 month ago, and 1.75% increase from 1 year ago. Total real estate market and what's going on in different states. Now there's something like home prices have increased so much that some people are actually taking really drastic measures. Now what's going on in Texas? Texas is actually, one city is specifically in Dallas. It's considering restriction home sales for real estate investors only. Now that's never been done before. That is a crazy idea, just to go ahead and make sure that the retail side of it for everyday people just like you and I, to go ahead and be able to go ahead and afford homes, because the inflation and the prices of homes increase so much that they're trying to counter it to where they're restricting it to only investors. Now the supply chain is still down, the inventory is still on the lower side of it. Do we project it to increase? Yes, we do project it to increase, because let's just face it, real estate prices have gone up dramatically. Interest rates have increased quite dramatically and quite quickly, to be honest with you. And so Dallas is one of those people that they're just trying to restrict home sales for real estate investors only. In the same sense, Flagstar Bank Corp, which is another really big wholesaler, they're also on the retail side of things. They're actually cutting their mortgage staff by 20%. So 20%. Bank mortgage revenue fell $74 million in Q1 of 2022 compared to the $110 million in previous quarters. Now this is an effect that has been happening across the board with every single mortgaging company out there. We've all seen the hiccups on it. We've all experienced, a decrease in total business volume, only because majority of our business for the past 2 years has been in the refinance industry, because inventory has been so low. People are kind of staying in their homes. They're not really selling it because the uncertainty in the real estate market, and we're really quite not sure exactly where things are going to be going in the next year. So 2022, it seems to be kind of like a wait and see type of thing, and it's just the same for everybody. Everybody is kind of uneasy with where the real estate market is, which is totally understandable. But that's where we're at on that. And then, like I stated before, your boy, I'm always ahead of the game. I'm always giving you information that's way ahead of everything. Now, adjustable rate mortgage demand doubles as interest rates hit the highest since 2009. Now, shortly after in before 2009, 2008, and before, adjustable rate mortgages were a really big thing, and now of course they're coming back and they're becoming a really big thing, because the fact is that people are still trying to buy homes. Now when you're trying to buy homes, when you're at 5.35, let's see where we're at today. We are currently at 5.3, well, the high on that was 5.45, which has been the highest in over 13-14 years, which decreases your total debt to income, right? It decreases your total debt to income, which makes it even more difficult to get into the homes that you are trying to get into. So let's say, for instance, a house is for $700,000. You are approved at let's say 2.5 or 3%. But when you get into the fives, and then you get, we're anticipating somewhere in the sixes. It's gonna decrease your total buying power, and it's not gonna assist you into getting into the home that you want, if that's the route that you want to take currently. Now, adjustable rate mortgages are something that a lot of people have been doing, especially when it comes to the 7/6s, the 8/6s, the 10/6s. What's a 10/6? It's just going to be a fixed interest rate for that allotted period of time, which is the first set of numbers, which is 10 or 7 or 8, whatever it is, and then it adjusts every 6 months after that, after your 8-year period has gone, according to the cap on your product and to the market rate. Now, adjustable rate mortgages are still ones. Now we have a 5/1 adjustable rate mortgages. The 5/1s are typically going to be on the higher side of things, but the 6s tend to be on the lower side of things because the cap on it and the adjustment is so frequently. But majority of people will need to go ahead and refinance out of that. But if you do want to get approved and you still want to stay somewhere in the 3s and you do have problem getting to your house, well, that's one of the options that you are willing to take, or you should take if you really want to. Do I recommend it? Well, yeah, majority of the time I do adjustable rates. I like interest onlys. Investment properties, you could go up to 40 years on an interest only. There's so many different products out there that, you know, it's not a bad thing to utilize a lot of these different mortgaging products, as long as the cap isn't crazy. Now the cap, what is a cap? A cap is just going to be like, even though the interest rates, let's say for instance, we lock you in at a 3.35, and then when your adjustment comes to term, when it's time to go and adjust you after your 7 years is up, or your 8 years is up, or your 10 years are up, or whatever, how many years that you get on your adjustable rate mortgage, we're going to go ahead and adjust it every year. Now the cap on that will be, let's say it's going to be a 0.5%, maybe it's a 1%, and that's the max that we're able to do. So even though you're at 3.35 and then your adjustment comes up and then we go to your cap, well, it could go ahead and adjust no more than that amount of time, or that amount of interest. So that is your mortgage rate update. That's what's going on in the real estate world currently. So if you want up to 50% commission rebate, any mortgage assistance, or 0% listing fee on selling your current home, link in the description below. I really appreciate watching. Please consider liking, subscribing, commenting, all that other good stuff. Any questions that you might want me to answer, and we go from there. Till next video, guys, I really appreciate you watching. Thank you very much.
Tonight I'm gonna feel alive, and no one won't be acting nice. So baby, go and start a fight. I'm in love with the city lights. Look, I'm enough of a big star. I got my girls and I got my cars. Come here, baby, be a buzz. Do whatever you want. Unlock your shop.